Well, greetings everyone, and welcome to another episode of Your Future Self with my good friend, colleague, younger sister from another mother. Goodness, how much can I stroke your ego today, Monica Stanchula from Credit for Caring? How are you? It's been like forever.
Oh, Chris, it's great to see you again. I'm glad we're back at this. It
Because
makes my day.
we just have fun doing this because we enjoy our company, and we
Yes,
also know that getting information out to our our massive fan club. Goodness, I mean, they're all over the world. You know that. At least you have your two kids living in Europe. So, well, I have a friend here and there, but it's always good to see you. And we've got some important information to share today about tax credits.
we do, Chris. And this is a really important issue. And I want to thank you ahead of time for your willingness to do this because, gosh, with inflation and everything that's happening right now, this is a more important issue than even even in tax season, I would say. So yeah, let's jump into it, Chris.
Well, Monica, I've said many times that nobody has caregiving on their bucket list of things to do in life. And there's so many areas that impact our life once caregiving unfolds, and it unfolds in a moment's notice. But I think there are some states now that are starting to offer tax credits. And I think what you're going to do today is help us grasp what this is all about and how to find this important information.
Yes. Yes, thanks, Chris. But first, I want to back up a little bit. I want to talk more broadly about the landscape of caregiving and what's happening in terms of government and our rights. And then I'm going to focus specifically on those tax credits. Is that okay with you, Chris?
I'm all ears. I pay attention to what my younger sisters tell me. So,
Well, thank you.
hmm.
Well, we know that there are 53 million unpaid family caregivers right now who are absorbing this high cost of care. And with inflation and rising rents and everything else that's going on right now, this is a really important issue. And we know that families and friends are paying for this caregiving, and the field in general is called long-term service and support is the way that the industry looks at this. And most people think that this is going to be paid for by Medicare. And the sad reality is, no,
No.
Medicare doesn't pay for this. Because, on average, we live with 2 to 4 chronic health conditions that may impact our daily activities, but they don't land us in the hospital. So most of us are going to be at home receiving care, and Medicare doesn't pay for that kind of service. And few of us have a fat piggy bank or long-term care insurance out there to help to defray the expenses of caregiving that we're going to need as time goes by. Today, Medicaid is the primary source for paying for long-term service and support. And few of us, unfortunately, are going to qualify for Medicaid because of the income requirements. So they have home and community-based services that would be great, but under the current restrictions, we're just not going to get it. So family caregivers will have to continue to pay for this care. And most of us, we're doing it by asking family and friends to chip in and help to defray the cost. And it's just a lot right now.
Well, I think that comes back to really the reasons why we do what we do is to try to get the information and referral out to family caregivers who, at a moment's notice, are thrust into this role without a lot of background information.
Yeah,
And what you've created at Credit for Caring and what we've created at the Whole Care Network is an information portal where people can find these details to help them manage their caregiving day.
that's right, Chris. That's right. And it's more important than ever. And so I'll start with some good news. There are 4 states in the District of Columbia that are that have a really comprehensive long-term service and support program that we all can benefit from. And those include, and I think you have a slide for this, Colorado, District of Columbia, Minnesota, Washington State, and Massachusetts. So if you live in one of those 5 states, your ability to interact with the care system and your rights being honored as a caregiver and your ability to get the information and the services that you need at home are better than the other states. So there's the good news about that. But that still doesn't give you a tax credit. And that's what we're going to focus on now. So let's get started and run through these 6 states for those lucky people that live in these states. So Montana's the first one, and they call their tax credit Elderly Care Credit. And it is for 20% of all qualified costs, minus 30% of your qualified cost, and then up to $2,000. Is that convoluted or what, Chris? I mean, you're going to need a CPA in order to get that one done. The second one is North Dakota. North Dakota has something called a family member tax credit. This family member tax credit means you're eligible for expenses that you incurred as a family caregiver up to $4,000, but it's a percentage of your income. So if you're lower income, you'll get less of that money back. But listen to what is said in that. North Dakota is saying, keep your receipts because you can get money back under this tax credit.
It's good advice at any care situations to keep your receipts.
Yeah, it's really true.
Yeah.
The next one is Missouri, or
The show
Missouri.
me state.
Which is, Chris, it's your home state. Which is the right way, Missouri or Missouri?
Well, it just depends on what area of the state that you're living in.
Oh, I didn't know that.
Yeah, and there was at one point. Of course, I lived in Missouri for 20 years, but so appropriate in this day and age. Well, some say, depending if you were a Republican or a Democrat, that's how you would say. That was always a fallacy, but I don't. Maybe it's true. Maybe it's true today because of the way politics is there today. Yeah, but one thing is for sure: in Missouri, we all agree it's the show me state. So show us what Missouri is doing for tax credits.
Okay, so with Missouri, you must be registered with the state, and the state has a board called the Division of Senior and Disability Services. You must be registered with them, and that's under Health and Human Services or Social Services in the state. You must be registered, and after you're registered, you're eligible for up to, get ready, $500 or less, depending on what kind of care you provide. And that's their caregiver tax credit. The next state is New Jersey, which has the Caregiving Assistance Act, and that's 22% up to $3,000 of qualified care expenses. Again, keep your receipts.
Right.
Keep your receipts. Keep good books. And the maximum amount, that they will pay is $675 for the year. Then we have South Carolina, which has the Family Care Tax Credit, and they reimburse up to $100 per month for a caregiver that cannot work outside the house, and $50 a month for those that are working and caregiving at the same time. I didn't find any documentation on how you have to register or validate if you're working or not. So be sure to check into that to learn more about the South Carolina program.
Yeah, and we'll have all these links in the show notes below, so don't worry.
Great.
as you're watching and listening, and we'll have all the links available. So I was rude. I interrupted my younger sister in the midst of.
It's okay, Chris. Thanks for that reminder. That's really great.
Mhm.
And then the last one is North Carolina. And in April of 2024, North Carolina passed the Child and Dependent Care Tax Credit, which is an extension of the federal dependent and child care tax credit. And you can claim up to $1,100 in tax credits for care-related expenses. And this reminds me, there's something I forgot to say earlier, Chris, before I started on this list of 6. And that is, this list is only for taking care of disabled and elderly people. This is not the child tax credit. They're 2 different animals.
They're very 2 different animals, right?
Right. So I limited this list to just those that would be pertinent to our kind of caregiving, not child care, not paying tuition, those sort of things. Okay?
It is, and this is one of the areas of caregiving that is often not talked about, juggling how not only to get benefits, get paid, finding all the information that you need, because all this information is coming to you in the midst of an emergency.
Yeah. Well, no kidding. No kidding. And that's why doing a program like this and talking about it, hopefully we can catch some people early in their caregiving experience and educate them on what needs to be done. Because, yeah, picking up the pieces afterward, Chris, you and I both know it's frustrating and it's almost impossible.
And I think somewhere along the line, as being advocates like we are, we want to be in a position to where we can advocate for more tax credits, because not all states are on board.
That's right. That's right. But Chris, if you look at the next slide, I want to talk about this before we go on, since I mentioned the child and dependent tax credit that's in the IRS code. Chris, right now, without something new, this is our best bet. This is the best way for someone to get paid as a caregiver. And everyone needs to get familiar with this. So I put a quote directly from the IRS code for us in this slide. And I'm going to read it because it's too important. The amount of credit is a percentage of the amount of work-related expenses you paid to a care provider for the care of a qualified individual. The percentage depends on your adjusted gross income. The total expense, excuse me, that you may use to calculate the credit may not be more than $3,000 for a qualified individual and $6,000 for 2 or more qualifying individuals. Expenses paid for care of a qualified individual are eligible expenses if the primary reason for paying for the expenses is to ensure the individual's well-being and protection. And that may sound like a whole lot of gobbledygook, but what it means for us as caregivers is, if there's a little worksheet within the IRS code simply for this purpose of qualifying someone as a dependent. And if someone qualifies, excuse me, Chris, you got to take that out. If someone qualifies as a dependent, then you can take these expenses. And so I encourage everyone who's watching us to understand that you need to do this ahead of time. You need to understand that if you're living with the person that you're taking care of, you're more likely to qualify under the Dependent Care Act. And if you're a married person, yet you've moved to live with the person who you're caring for, that also qualifies you for it. But overall, it goes back to bookkeeping. It goes back to having the records and the receipts to be able to validate that you provided that care.
It comes back to what every tax attorney, CPA will say to you: keep your receipts.
That's right, Chris. And I mean, it even comes down to things like calculating your mileage. How many times are you driving to the hospital, or you're driving to a doctor's appointment, picking up groceries or non-consumables that someone is using? All of those things need to be tracked, because that's part of your caregiving experience. And I know this is really onerous and you have other things that are more important to do than this. However, we also know that financially, caregiving really can exhaust you.
It is, there's a variety of studies out there that talk about the estimated cost that a unpaid family caregiver puts out of their own pocket anywhere from $7,000 a year to $14,000 a year.
Right.
And I think those numbers are low.
I do too, Chris. I do
Be-
too.
because what often happens, and this is unsolicited advice for just from my personal experience, if possible, pay for any of your supplies with your debit card or your credit card. Don't pay with cash, because you'll always have the receipt when you put it on a credit card or a debit
That's
card.
right. That's
Yeah.
right, Chris. And at Credit for Caring, that's what we encourage all of our customers to do as well. As long as you're buying through us, you can send us a message at the end of the year and say, hey, send me a compilation of what I've spent on my account. We're happy to do that. We're happy to help you with those record keeping. But you're right, Chris, that debit or credit card for gas and groceries and, going to the pharmacy, all those things are so important.
A trip to the pharmacy. That does happen quite often, doesn't it, in the midst of.
Yeah. Yeah. And it seems like they're incidentals, right?
Right.
You're picking up, gauze and Band-Aids and a thermometer, but those things add up over time.
Those things add
Which
up.
leads us to our next. Which leads us to our next group.
Well, of course, I was going to lead
states.
you right into that. My goodness.
Great. So there are 10 states where there are refundable tax credits. This means that you can get a refund on your state taxes for your caregiving expenses. So, Chris, we have a slide on this one. The refundable states are Iowa, Hawaii, Colorado, Louisiana, Maine, Minnesota, Nebraska, New Mexico, New York, and Vermont. So in these states, much like the 6 states earlier, keep really good records, because even though you don't get, you can get money back from the state as a refund against your taxes when you include your caregiving expenses there. And this is a really good.
Because state taxes could be kind of high too.
That's right. That's right. Right. And Chris, beyond that, we also have 11 states, and we have a slide on this one too. Now, these states are non-refundable, but they will reduce your tax burden. And they include California, Delaware, District of Columbia, Georgia, Kansas, Kentucky, Maryland, Ohio, Oklahoma, Oregon, and Rhode Island.
Oh, Monica, this is like as clear as mud, right?
I'm trying. Listen, I'm trying. I mean, it's really true, Chris. It's really true. There's no consistency when it comes to this. And it's kind of like at the state's whim of whether they're going to do this or not. And this is no way for us to support family caregivers who are, to be honest with you, we as family caregivers offset the same amount that the federal budget pays for Medicaid in a year. Or to put it another way, the amount that Walmart makes in profit in a year. These are not insignificant numbers. $648 billion is what is calculated as free care that is provided by caregivers. And we need federal programs that will actually serve us as caregivers. I mean, this is significant.
And this is what is so amazing in the many years that you and I have been involved in the care conversation, both as providing direct care to family members or spouses, and then advocating for folks like ourselves who find themselves in the role. We often come across folks who are, how do I want to say this kindly, making the rules and regulations who haven't been in the role.
That's right. That's right.
They don't understand. They're looking at it in a way that is not realistic to what the role really how the role really plays out. But I do think, and I'd want your opinion on this. Well, of course, COVID really has changed some of this. Care is more prevalent in the conversation. And I think there are some legislators who have recognized that. And there's some bills that are coming to the forefront that are going to help family caregivers.
There are. And Chris, if you recall, during the pandemic, we had something called the earned interest tax credit.
Right.
And that was a way especially to help families to offset a lot of those expenses. Well, those have dried up. And you're right. Once you take away those earned income tax credits and then you start unwinding Medicaid and you start disenrolling a lot of people that were on during the pandemic, now you have a whole new or a returning batch of caregivers who are once again struggling with all the expenses it takes in order to caregive. So we have the Credit for Caring Act of 2024. And Chris, to your point, we finally have some members of Congress who are recognizing how important it is to get some relief to family caregivers. In fact, it has a state and a Senate version. On the state level, Mike Carey of Ohio is the sponsor, and there are 23 co-sponsors. 23 co-sponsors along with Mike Carey, and it's across both parties. And then on the Senate, on the same day, on January 31st of 2024, Michael Bennet of Colorado also presented the Credit for Caring Act of 2024 with 5 co-sponsors. So you would think that this would be able to get some traction. And Chris, I think I made a slide, and the slide mentions what it would cover. I mean, this is pretty significant. And this bill would give a caregiver a tax credit of up to $5,000 or for 30% of the long-term care expenses, not to exceed $2,000 in a taxable year. Okay, I know that's kind of convoluted, but this is our best chance to be able to get some relief for caregivers. You have to have an income over $7,500 because under that threshold, you're qualifying for Medicaid. So we're talking about people above that level who are providing caregiving services and could get a pretty significant tax credit for the caregiving that they're doing. This is our best, and this would require at the moment a change in the federal tax code in order for this to happen. But when it does happen, this is a breakthrough for us caregivers. And the slide says it. It covers the cost of caregiving. It covers the cost of technology for home monitoring, home modifications, home maintenance, medication management, transportation that we talked about, keeping those receipts for, incontinence supplies and other supplies that we provide from Credit for Caring, and coordination of services at home or in a nursing home or wherever else, whatever location the person is receiving care. This is significant, and we need this legislation to pass, Chris.
And the other significant component of this, Monica, that you mentioned early on here about these bills, it's bipartisan.
Yes.
And that's the unique thing about caregiving and caregivers. There's no boundaries. Caregiving impacts everybody. White, black, green, yellow, blue, gay, straight. There might be some cultural differences as it relates to care, but caregiving is the one social issue that brings people together from a diverse set of people, because we all just want to care for the person that's entrusted with our care without the drama and may I be so bold and say BS that systems put on caregivers while they're in the midst of an emergency. And what the work that you're doing to bring this to the forefront is really going to help alleviate a lot of even if it's just a little bit of stress, to where caregivers can find that help that they need.
Thanks, Chris. We need to do this, as you and I. As we've spent our careers advocating for This is important work, and if I can leave with just one message for everyone is you got to keep your books. You got to keep
your
records.
books. It's got to keep your books, and you got to keep your books, and it helps you as you balance your future self. Monica, it's so good to visit with you again.
Likewise, Chris.
Let everybody know how they can be in touch with you.
Well, you come to creditforcaring.com and you will find everything we have to offer there. And we'd love to have you visit and drop us a note on our Contact Us page. We'd love to hear from you.
And you can visit the Your Future Self podcast on the Whole Care Network and Credit for Caring on the Whole Care Network.
That's right.
We're everywhere, Monica. Until the next time, take care.
Chris, thank you so much. Thanks. Take care.